What happens when you throw two ETFs into an alligator-infested swamp along with some fresh roadkill that's been baking in the hot sun? I have no idea, but we're about to find out. Welcome to ETF Battles. I'm Ron DeLegge. Today's ETF battles between two large cap stock ETFs. We've got the iShares Russell 1000 ETF, that's ticker symbol IWB, versus the Invesco FTSE RAFI 1000 ETF, that's ticker symbol PRF. Now you can think about this battle as a bout between traditional market cap weighted indexing versus factor indexing, smart beta investing, or whatever else the nouveau indexing camp is calling themselves these days. I've lost track. By the way, the latter group has been trash talking traditional indexing for quite some time. So can they back it up? Well, we're about to find out on today's program. Before I introduce the judges, I need to mention that if you're new to the show, none of the battle outcomes are predetermined or known ahead of time by any of the judges or by myself. You simply give us your battle requests and our judges call it as they see it. Hit us up on our YouTube comment section or on Twitter at ETFguide. That's our handle. Be sure to give us your ETF ticker matchup requests as well as your hashtag, you know it, hashtag ETF Battles. So helping us to judge today's matchup is Todd Rosenbluth, head of ETF and mutual fund research at CFRA, and John Davi, founder and CIO at Astoria Portfolio Advisors. Gentlemen, welcome to the program.
Good to be with you, Ron.
Good to be here.
So the four battle categories are cost, risk, performance, and a mystery category. For the mystery category, our judges get to choose a factor or maybe several factors that they feel are material to support their analysis. And who knows, the mystery category could end up deciding which ETF wins today's battle. Now, my scorecard is ready, and so is our shot clock. So we're going to get going, and we're going to begin with four battle categories, one at a time. Each of you will pick IWB or PRF as the winner in each respective battle category, and you've got 30 seconds to do that. Let's begin with cost. John, you've got 30 seconds. Go.
All right. So I think that when you're deciding to pick an ETF, you should not just look at, management fees. I think you should look at known costs and unknown costs. So the known costs would be management fees, commissions, let's say. The unknown would be bid offer, market impact. In each of the categories, IWB, I would say, has lower known costs and unknown costs. So expense ratio 15 bips versus 39. Bid offer when you trade is about 3 bips versus 5. If you look at median daily liquidity for IWB, it's about 140 million a day compared to 19 million a day. So for me, IWB is the winner from a total cost standpoint.
Okay, very good. Todd, you're up next.
Yeah, we at CFRA, when we rate ETFs, cost is one of the three buckets. We'll get to risk and reward in a bit. And that cost is going to come from an expense ratio and a price to net asset value bucket. And again, IWB is the stronger one. John touched on the lower expense ratio. The trading volume is much higher for IWB than PRF, and it trades much more in line with its net asset value historically. Again, it's a broader portfolio. So IWB is the winner in my book.
We need to move into the next category, which is risk. Todd, who wins this battle category between IWB and PRF?
So we at CFRA, when we look at risk, we're looking at it from two perspectives. The risk of the performance and that volatility that you get, as well as the risk of the underlying holdings as we look forward. And we find IWB, which is more broadly diversified, has higher exposure to some of the mega cap companies, like Microsoft in particular, which you won't find within PRF. We think the risk profile is much lower, more diversified fund. Its volatility has been lower historically. We think it's a much better fund, again, from a risk perspective. That's IWB, the iShares Russell ETF.
Excellent. What's your take, John, on risk? Who wins the battle?
I would say as an active manager, Astoria Portfolio Advisors, we do believe in using factors, believe in taking away from the market cap weighted indices. I think there's a lot of risk in large cap index funds. As Todd mentioned, you've got big tech kind of growth allocation, at the very top of these broad-based indices. So we do tilt away from market cap. So PRF is something that we would use. I look at PE ratios as a form of risk. IWB is like a 19.5 PE ratio. PRF is like a 14.5. Inherently, in my DNA is this concept of buying low, selling high. I guess you can say that's a kind of like a value style of investing. So I like, from a risk standpoint, PRF. I think there's more risk in IWB, just from like a fundamental valuation standpoint, market concentration risk standpoint.
The next battle category is performance. John, take it away. Who wins the battle between IWB and PRF?
So I think that, you should never make any investment decision just based on performance. I think you should look at cost, valuations, where are we in the economic cycle. If I look at CAGRs, since 2006, I see that IWB has beat PRF by about 100 basis points. So for me, I would say I would still lean on PRF. I still would argue that is a better kind of overall strategy. It has underperformed. So from that standpoint, I would say it lost IWB. But given where we are in the economic cycle, there's so much concentration in large cap growth and tech stocks. I wouldn't want to own that in the next 1 to 2, 3 years. I would still lean on PRF.
Excellent. We need to move on to Todd. What's your take on performance? Who wins the battle?
Yeah, have to disagree with John. I'm a big believer, as he is, that you shouldn't rely on past performance. But let's not ignore the fact that PRF has underperformed significantly on a 1-year basis and a 3-year basis. So you shouldn't be buying the fund just based on how it would have done. But I hope, John, you weren't owning PRF, because you'd be lagging behind a broader market and you'd be regretting that decision beforehand. As we look forward, we still think that IWB, again, because of its more of a growth component, more of a blend aspect of it, we're in a cycle where technology is likely to do well. There's little to no exposure to technology as you'd find within PRF. That's intentional because they're more growth-oriented stocks. But yeah, IWB is by far the better performer.
Let's move on to the mystery category, which this is where our judges get to choose the factor or thing that they believe is important to this particular battle between IWB and PRF. And our judges can also take a pass on the mystery category. It's completely up to them. So let's start with Todd. What's your mystery category and who wins this battle?
Yeah, exposure would be the mystery category. Where are you getting your exposure on a sector perspective in particular? So I touched on briefly that IWB, again, it's the Russell 1000, so it's got broad exposure to both growth and value sectors. But whereas PRF is heavily weighted to not only financials, but energy companies that are facing very tough times and are likely to continue to face tough times. So we think a more balanced approach that you get with the iShares Russell 1000 ETF is a more appropriate way to go. So IWB, from an exposure standpoint, broadly diversified, is the winner to us.
John, what's your mystery battle winner between IWB
I would say,
and PRF?
Valuations, again, I look at IWB and I see, 19.5 P ratio. That is, at the top end of the historical range. You want to buy low, sell high, not do it the other way around. People are enamored with, momentum investing, which is buy high with the hope of selling higher. I don't understand it. I've seen guys like Warren Buffett for half a century or more buy low, sell high. I think that's what you get when you buy PRF. You're looking at a 14.5 P ratio. The last 10 years you had tech dramatically outperform the entire market, all of the sectors. I would say that there's a very high probability in the next 10 years, tech won't outperform. You got to skate to where the puck is going. So from that standpoint, I would say PRF, and I would kindly disagree with Todd. And I think you have to look forward and not backwards. And energy financials have been drastically underperforming, so I would kind of lean on PRF.
Excellent. Well, that does it, judges. You've weighed in, and we're going to give you one final chance to kind of recap your final battle winner between IWB and PRF. John, you've got 30 seconds. Go.
Yeah, so in anything in life, you want to do the opposite of what everyone else is doing. That's the only way to get ahead. Everyone's buying low-cost, cheap ETFs. We would never buy, an index fund because everyone else is buying it. The way you outperform is you tilt away from market cap. Right now, we have more market concentration risk and large cap growth tech than we've had, in the last 15 years. I think there's a reasonably high probability that that won't bleed in the next 10 years. Ultimately, capital is allocated looking for the highest return per unit of risk. There's a lot of risk in tech and growth. So I would tilt away and I would lean on like a PRF type investment.
Todd, who's your overall winner between these two ETFs?
The IWB. I agree with John. You shouldn't just buy something because it's cheap and because everybody owns it. But this is actually not the cheapest ETF around, and not everybody owns this. There are people who are owning other things. But relative to PRF, this is more broadly diversified. The risk profile is lower. The cost is lower. And as we at CFRA are looking forward, not backward, John, don't worry. As we're looking forward, we think the risk and reward profile of IWB is stronger. We think technology stocks are going to be good winners going forward in communication services, and you have a much heavier weighting in those than you would in PRF.
Excellent. Well, that does it for today's battle. And according to my scorecard, the final winner with a very narrow victory is IWB, the iShares Russell 1000 ETF, and it pretty much beat its opponent on every category. Well, strike that. Cost was really the only category that IWB beat PRF, but all the other categories, including risk, performance, and the mystery category, were a split even match. And the judges have spoken. And so put this fund on your radar screen. If you're looking for a U.S. large cap stock ETF, then IWB should definitely be part of the conversation, and at the very least, a starting point for further research. Well, that does it for this round of ETF battles. The alligators enjoyed another delicious meal, and thankfully, none of us were on the menu. A big thanks to our judges, Todd and John, for another excellent job at judging today's matchup. Before signing off, which ETF battles would you like to see in our upcoming episodes? Post your thoughts on our YouTube comment section or hit us up on Twitter at ETFguide. That's our handle. Be sure to hashtag ETF Battles. Thanks for watching. I'm Ron DeLegge. And until next time, watch the battle before you invest right here on ETF Guide TV.